A turbulent 2018 for the South African economy, and while global markets have rallied, especially in the US, South African investors have sadly missed out. So investors in the country could be forgiven for feeling slightly disillusioned by their portfolios. But there are often lessons to be learned from bad experiences. So what can we take away from 2018 when looking ahead to invest in 2019? Eugene Visagie is a portfolio specialist at Morningstar Investment Management, and he joins us now from Cape Town. Hi there, Eugene. So why were our investors just so jaded this year?
Hi, Temekile. I think it's just important to put it in perspective. So, of course, it's been a very difficult ride for South African investors in our equity market, in our listed property market. We missed it out on quite a bit of the rally during 2016 and 2017. But 2018, we have seen quite a bit of a pullback in the market. But as you've just mentioned yourself, it's important to note that South Africa is not the only market that has delivered negative returns this year. An interesting stat that we saw the other day is 90% of all asset classes have delivered negative returns for 2018. That's more than they were in 2008. So again, this is not a South African phenomenon. South African investors tend to overreact, and we tend to say, but this is due to our political uncertainty and due to the changes that's happened. But that's definitely not the case. Something to really take into account in the local market too, and we've seen the capitulation already happening where investors are moving out of equities because they have got very low or negative returns over the last 3 years and moving into cash. And unfortunately, normally after such a bad drawdown that you see in the market tends to run very, very hard and relatively fast too. And those investors then miss out on those opportunities. And historically, equities is the only asset class that can really grow an investor's wealth over time.
So let's talk to you then about this argument about a hesitation that the average investor often feels during difficult economic times. But on the other hand, there's also an argument to be made about how a turbulent time in a market is perhaps the best time to put in money into an investment. Where do you stand?
That's actually a very, very valid point. So if we look at the JSE, our equity market, we just look at the price of the respective businesses. But if you look at the top 40 companies that's listed on the JSE, a mere 29% of their earnings is generated from the South African market. So that says another 61% of their earnings actually come from abroad. And as you've rightfully mentioned, the US is doing extremely well. There's certain other countries that's also delivering good returns. So these companies are still delivering very solid earnings, but the price that you have to pay for them are a lot cheaper now. So there is massive opportunities in the South African market, both in the large cap space and in the mid cap space. And again, these companies could rally not due to South African growing specifically, but just due to global growth being stimulated and all markets participating in that.
Tell me this then, Eugene, is it that the South African investor is too risk averse?
I don't think South African investors are too risk averse, but I do think that South Africans tend to internalize and just focus on their own environment. As I've mentioned before, the political environment tends to make people very uncertain, and then they do tend to move away, either take their capital out of the South African economy or then just sit in cash. As mentioned before too, the rand is very, very volatile. It's also one of the most liquid currencies in the world, so it's very tricky to try and time the currency and what it will do. We've seen it rally quite a bit over the last month, but you are quite correct. I wouldn't say investors are risk averse, but they do tend to overreact.
You mentioned politics and just how the political climate influences what we see on the market. What are the main expectations from the markets going into 2019, especially in the context of a South Africa that is going into a general election? We have an ANC that has a new leader, the DA and the EFF, the two smaller parties that are recognized really as major players, are also hoping to make significant gains.
I think that's also quite important, that where investors need to realize, and as I've mentioned before, the top 40, a mere 29% of their earnings come from the South African market. So we as South Africans might see this political noise every day, and there will be a lot of noise coming up to the election. We've already seen Hlari Matsoeneng launching a new party, and there will be new and other parties coming up too. But these type of events do not influence the day-to-day running of these businesses that's listed on the equity market. These markets' earnings, they are focused business where they are focused on growing their earnings. And we at Morningstar believe that this is an ideal time to invest into the equity markets, because you are actually paying for a very good company a lower price than what you would have paid 3 to 5 years ago.
Eugene Visagie, portfolio specialist at Morningstar Investment Management, thank you.